everyone. Welcome back to our Real Deal podcast. You've got Sarah Willis and Suzanne Moore here. Yeah, it's been a little while. We acknowledge that we might not be as consistent with this as we want to be, but like all things, we've got ebbs and flows, and today we are flowing. We're here to debrief you on an amazing meetup that we had in April. It was really all about mortgage acceleration and how you can pay off your mortgage, or if you want to call it your mortgage, we'll learn more about that in this episode, in 5 to 7 years without changing your income. And this does not mean making extra payments on your mortgage. This was a mind-blowing meetup for anyone that attended, and we just want to make sure that if you didn't catch it, that you do catch the full replay that's on our YouTube channel, and tell you a few of the highlights that we learned. So again, like I already said, this was not about paying off your mortgage faster. This is actually about a whole new system for buying properties and how to restructure how your cash flow that you're already putting into these properties can interact differently with debt. So going into this, like, one of the biggest questions we get from people is just like, is there something better than a mortgage out there? And honestly, before this meetup that we had, I've heard of people using HELOCs for buying properties, but I've never seen it truly implemented. So most people, what they know about is this 30-year mortgage, and people think it's like the only path, and they think that putting extra payments or doing one extra payment a month or payments every 2 weeks is really your only lever. But what we learned in this meetup is that it is not all about the interest rate, and it is not all about the timeline, and it's not all about your down payment. So this is not a hack. This is actually a shift in how you can think about managing your money, and in different ways for you to be able to purchase properties with different products.
Yeah, and just to dive right into what we covered, the most interesting thing about the meetup was that our guest speaker spent 17 years as a mortgage broker. So he knows all about the mortgage industry. He was selling mortgages for years before the crash and after the crash. And what changed his mind? I mean, he was making a great salary as a mortgage broker, as many mortgage brokers do, because they make 1 to 2% on the loan amount of every single property that they fund loans for when they're selling mortgages. Well, he met a very high net worth person who he was trying to get his business and trying to get his network's business, right? To sell them, to get them to use him as their mortgage broker. Well, this guy basically said to him, mortgages are crack for middle America. The rich don't use them and the poor can't afford them. And that just blew Michael's mind. And he was just like, tell me more. How do the rich buy their houses and use leverage, or are they just paying cash? Oh no, they're not paying cash. They're getting that have simple interest and they're open-ended. So this is like the total mind shift for Michael that helped him create the company that he now runs, where he's helped over 10,000 people transition out of a traditional 30, 15, 10-year mortgage into these HELOC products and essentially have debt on their home like the ultra wealthy do. And he gave us a really interesting history lesson about the American financial system. And I'll let you all dive into the replay to learn all of that. But essentially the big takeaway and why these things work and why no one knows about them is essentially that once banks were able to lend out $10 for every $1 they have on reserve, they no longer made money doing these types of HELOCs for people. Instead, they could have you put your savings in a savings account or put your paycheck in a checking account. And if you have $2,000 in a checking account, they can lend out $20,000. That's huge for the bank. So what are they going to sell? They're going to sell debt. They're going to sell debt that they make more money on. And that is with the mortgage. Like I said, banks are making 1 to 2%, or mortgage brokers are making 1 to 2% on the value of the loans that they're making for people. And they're able to do tenfold versus the deposits they have. So it basically negated the whole bank's incentive to market these HELOCs, because they make like, your closing cost for one of these HELOCs is like $250, $500. Compare that to like 10, 12, $15,000 of lender fees that you're going to pay to close a mortgage, it's a no-brainer. But banks still do these. And you just have to know the right questions to ask to get one of them. If you can qualify for a traditional mortgage, you can 100% qualify for one of these HELOCs. And it's all about how your money is deployed. And it's a total mind shift for where you put your money. Because when you get your paycheck, instead of putting it into your checking account and putting some of that into your savings, you put the whole darn thing into your HELOC, which is like, what? No, the way we think about mortgages is like, oh my gosh, no, why would I put my whole paycheck into my mortgage? It's an open-ended system in there, and it's basically recalculating your daily interest amount every single day. So it's taking the amount of interest that you owe down every single day by the amount that's in there, and things can flow in and flow out. You can pay your expenses out of it. You can do all kinds of things just like you would out of a checking account, but you're leaving the money in the HELOC to help defray your interest costs over time. And as long as you have cash flow, you can use this to your advantage to basically reduce the amount of interest that you're paying over time, which is how you can pay off a traditional, like what would be a 30-year mortgage in 5 to 7 years. And there was even a guest speaker, Sarah, right, that was on the call that paid off his mortgage in 5 months. He had a lot of cash flow. No, no question about it. Definitely one of the most aggressive payoffs that Michael talked about. But you guys, this is like complete mind shift. So I'm going to just stop there and yeah, Sarah, feel free to chime in.
Yeah, I mean, for me, the biggest thing that I think people can try and wrap their brains around is just when you get a mortgage, you're paying interest on your loan balance forever, right? And all of that interest is front loaded. Your banks are collecting all of your interest up front. So there really isn't any incentive for you to pay it early, right? And as opposed to, like Suzanne just said, when you're putting their money back into your HELOC, they're recalculating your interest every single day, right? So we've heard of this as like called the Australian mortgage method. That's another term I had heard about it in the past. But what I didn't realize going into this is that you can actually purchase a home this way. You don't even have to get a mortgage first and then get a HELOC. You can actually go ahead and purchase entire properties with a product like this through this method. And like Suzanne said, all you have to, if you can qualify for a regular mortgage, you can qualify for this. But what I will say is that our wonderful speaker, even though he does this for a living, he teaches this, it's sometimes you don't want to pay things off right away, right? Like he even keeps a few of these going for a few of his properties, because in investing and in life, like liquidity still matters. So there's always that tension between cash and debt and what makes the most sense and when to pay things off. So you kind of have to be looking at this from a wider angle lens, and just know that not all debt needs to be attacked aggressively in this way, but just having this option and knowing that over the life of a 30-year mortgage, you end up paying like 75, 85%, of the total loan as interest of the total loan value, versus if you look at the life of one of these loans, it's probably closer to like the 20 or 30%, right? It's just a huge savings. And this is not something really anybody is talking about. And I want to send this to all of our lender partners and open their eyes, and just so everybody knows that they have options. So
Yeah. And I
something
think the
like
other
that. Yeah.
interesting thing, I just want to point out quickly too,
Yeah.
like our minds are so trained to like mortgage payoff, right? And mortgage is a closed system where you can't access your equity without either doing a refinance, selling, or pulling out a HELOC, which is another loan on the equity of your home. The way it works with these HELOCs is like you have access. It's like in and out access to your equity. It's almost like, he talked about during the pandemic how people that had these loan products did not go into default on their loans because they could access their equity and be able to pay their bills than their mortgage, right? Or for their home, they could pay their whatever the bills that were coming up because they could access their equity. So it's like a total mind shift, and it's so much more powerful than doing the 13 payments a year that you hear about for mortgages, or doing, the biweekly payments, doing 26, biweekly payments, those types of things. I mean, sure, those are effective strategies to reduce the amount of time of your mortgage, but he even also talked about how the fact of the rate is not even that important because it's the amount of time that truly determines the cost of the loan over the life of the loan. So, like we were just talking about with mortgages, typically, especially with this interest rate environment, you're paying 6.5%. And say you take out a $500,000 mortgage, that's what you're paying for the 30 years of that mortgage. You're paying over $1 million. And that's why it takes so flippin' long to pay off the mortgage. But when you're doing one of these things, that mortgage, the interest calculation happens every single day based on the amount of money that is just sitting in that account, coming in and going out, right? So you get to use it. And if you need to borrow from the equity, you can pull it out and do something else with it. And then ideally put it back in. So totally
So,
interesting, total mind shift,
yeah,
really
I mean,
concept.
I just want to make sure that it's super clear too. Like, so it makes no sense for your money to be sitting in your bank account when you have one of these going, right? Like, you can go and put all of your money in your checking account into this HELOC account, and it's still there for you when you want it to pay things with. And like what Suzanne said was, when these people couldn't afford to pay their mortgage, they actually borrowed from themselves in this HELOC account in order to pay the mortgage, which is just amazing. And they could just jump right back into it when life was normal again.
Yeah. So that does bring up like who this is for and who it's not for. It's people who are financially disciplined, who have cash flow. And it's not for people that are living really close to the edge, like really tight budget, who don't have, a cushion sitting in that account to help defray the interest calculations every single day. If you're not disciplined about your spending and you might overspend, probably not the product for you. But it's about having that consistent income, or even just consistent inflows. It doesn't mean you have to have a W-2 job. Like this could work for someone like Sarah and I that get commission payments that come in, whenever we sell a house. So it's not like it has to be a W-2, but it's just important to know that you have to have that positive monthly cash flow. You have to have financial awareness, and it's about optimizing your financial situation to reduce the number one cost most of us, which is our housing expense.
And how, well, not only housing, but in this case, just the high interest that the banks get to
Mhm.
collect from giving us this loan. So this is just another hack that we wanted to make sure that all of you knew about, and we had a great meetup about it. And yeah, just share some of the highlights in this episode. And of course, in our show notes, you can get a link to the full meetup recording, which I highly recommend you watch. And you have the opportunity there to reach out to the speaker, Michael Lush, and chat with him about potentially using this strategy for your next investment here in Central Oregon or beyond.
Yes. And just to recap, if your mortgage is your biggest expense, it should be your most optimized system. And it's about making your money work smarter for you so that you have more to work with to achieve your goals, whatever that might be, whether it's having a cool place to land and Bend when you're in town, or having a condo where you can head up to the mountain, whatever it might be, or beyond that, we're here to help you with real estate in all aspects. And that's why we love bringing you all these creative new ideas and, like Sarah said, kind of financial hacks to help you make the most of your money. So thank you so much for joining us for the Real Deal podcast with Suzanne and Sarah. If you liked this episode, please like and subscribe to our channel. We have so much more great content coming for you. And we'll see you next time on the Real Deal podcast. Thank you so much.